All right, everyone, welcome to a weekend wrap up where myself, Michael Nauss, chartered market technician from StatsEdge Trading.com, we're going to go over what happened in the markets this week, what we could potentially see going into next week, as I wait for all of the systems to get run that we're going to run over at StatsEdge Trading. So if you're a StatsEdge Pro member, stay tuned. Tomorrow or the next day, you're going to get access to the 30-ish symbols that could potentially trigger for everything that we're watching when it comes to pullbacks, mean reversion, breakout trading, all of that. Again, if you want to learn more, make sure you go to StatsEdgeTrading.com. You can check out all the back tests for all of the systems so you can see roughly what they're trying to do, how they perform, and why the guys over at StatsEdge Trading and myself love them so much to trade them. So I'm telling you, especially in this environment, having a systematic process, having I'm going to do this because that happens, and not have to read the news and tweets and all of that certainly helps out. Uh, but we're recovering quite nicely here. It's not over by any means, but it's certainly not real bearish right now. We're getting continuous moves higher. We broke through this VWAP right here, was the VWAP from all-time highs. I mentioned there, I remember on one of these videos, that what I wanted to see was just some chop through it. It's what happened. Would have been nice, I think, to see a little bit more. But now we broke up and broke through. And then not only that, today's action is pretty interesting because we gapped up right off the open. We tried to come in that first half hour of the day. We were met with buyers. We had this day right here, which I think was probably the most craziest. We had a massive sell-off on some GDP numbers or something. Buyers came right back in. So this is just showing me that every time, you can see all the bottoming tails here, every time we're getting any sort of dip, at least for now, we're getting buyers that are coming in and buying the dip. So we're doing a little bit of a FOMO run right now, which I think is fantastic when it comes to what it is that we're looking for uh, as bulls. But we are getting a little bit overextended, right? We have gone from in what April 7th to, so in a month we are up 18% in a month. That's quite a bit. So, we were down quite a bit before then, but a pretty massive bounce, pretty sustainable bounce that has been just fantastic to be long. Like, I sent out recently, we had gotten Palantir somewhere in this area. That today is close to new all-time closing highs. We're still in that, and Netflix. Some of these rotational setups have been doing absolutely phenomenally, while we've been taking more kind of discretionary trades. Like NSP should have triggered right here, but it gapped down through the trigger, so we actually got filled at the opening price, and then we're up a few bucks on that. So trying to scalp around as the volatility remains high, while we are holding a bit of a core of a portfolio that, again, has been working just awesomely. So that's what we're seeing going through there. And let's just take a look here at some things that I wanted to note. So Bitcoin, you can see if we go back to the SPY, right? We talked about, we had this massive sell-off. We came back to the VWAP from all-time high, and then we smashed right through. If we look at Bitcoin, it really led this rally, right? Talking May 15th, 16th is where we stopped going down and we started to hold this range. We broke out of this downtrend line, and then we've just been grinding higher ever since. So this bifurcation between looking at Bitcoin and then the Qs or the SPY or whatever it is has been quite a bit. And this isn't something that we've seen quite a lot in the past. We've generally seen Bitcoin's up, the market's up. Bitcoin's down, the market's down. Bitcoin was like a leveraged kind of tech instrument. But at least for now, we are seeing a divergence where Bitcoin is moving on its own. That to me is really interesting, because that only not makes it interesting for me as a trader and an investor, but it starts to get interesting for IRAs and these more boomer type, I guess, ways of investing. Because if Bitcoin is just going to be a leveraged version of the Qs, less people are going to be interested in recommending it. However, if Bitcoin is going to be a diversification asset where you put a couple percentage of your net worth in Bitcoin, and it's actually going to hold up when the market goes or moves somewhat different to the market, that gets way easier to recommend, to say, yeah, you should hold a couple percent Bitcoin because here during this bear market and this crazy action, it actually held up okay. If that's going to remain, that's again something that we need to see more time of. But right, people are still using gold as a diversification asset, and it only worked the first time in the 70s before now. So just a little bit of a movement can really help there. Solana is kind of lagging a little bit, but it's holding up okay. So Solana broke that downtrend about the same time. I like the fact that it undercut this level right here and got everybody scared. And now it's holding above it and holding really high in this range. So a lot of crypto is looking good out there. Now, I think some of that has to do with the fact that we had that sell off in the dollar. However, the dollar's been holding up actually quite nicely. And if we get back into this range, this is going to be hilarious. Now, the thing that's important to note with the dollar and other the markets in general is markets really don't care if the dollar goes up a little bit or down a little bit. It's not that kind of a correlation. But what happens is if the dollar is collapsing, that has to reprice a lot of ways businesses work. Same if the dollar's ripping, they have to reprice the way businesses work. So much like when it comes to things like interest rates and bond yields, a even dollar, calm and relaxed dollars is the best thing for market. So if we end up getting back into this range, you can see again, this was 2023, the end of 2023 and 2024, where the market just kind of remained chill. If that's going to happen, then I think that's going to be bullish for stocks. Now, we're seeing some of in the SPY, we're obviously seeing these good moves. I did that whole video about the breadth thrust, and that happened, somewhere in this area. Now, what we're looking for is continuation from different markets, and we're starting to see that. For example, Berkshire Hathaway, B, right? I just did a tweet. Congratulations to Uncle Warren, new all-time highs. So, what does Warren Buffett hold? Industrials, financials, boring type names. So those things hitting new all-time highs just show that that's where we can focus our time. That's where we can focus our attention. It's not so much the high-flying tech stocks, the Metas or whatever in the world. It's more of these boring or type names that are doing well, like financials, for example. If we're comparing to this low right here, they broke that low much faster, and they're much closer to all-time highs on a percentage basis than most. So the fact that they're doing so well, it's something that we have to keep an eye on, right? XLI, industrials, that's doing fantastic. One thing that's great is this aerospace and defense. So full disclosure, I own this and a bunch of names in it. For a video that I made a while ago, just basically noting the relative strength when we were in this area. We've broke all-time highs in aerospace and defense. So there are beacons of new all-time highs happening. There are things that are breaking out and being stronger than they ever were before. Not just in America, EWU is the United Kingdom ETF. That's hitting these new highs as well. So we go here, it's not new all-time highs, right? But if you just kind of mark from, say the 2018 level, we are getting above those highs on a weekly closing basis as well. So not new all-time highs, but a nice solid looking breakout here in the United Kingdom. So seeing all of these things and seeing the market do so well just kind of tells me that it's going to be time to start turning on more trend following systems, do things like that. It's the main reason I do this analysis of the market is I want to know what environment that we're playing in so I can make sure that we are trying to take the best advantage that we can of the different systems. Been very big into mean reversion, pullback trading. That's been working for us. So now we need to take a look at maybe doing some longer term trend following. If something comes in outside of the US, that's going to be interesting to me as well. But absolutely fantastic the way these systems have been going. Absolutely fantastic the way the market's been going. So what are we watching out for? Well, we are obviously in a very tweet driven market. We can have one tweet exchange could kind of collapse us here. So unfortunately, you can never plan for that, right? So that will definitely move the market, but it's not something we can plan for. So it's not something that I'm going to waste my time worrying about. I'm going to continue to trade the trends as long as the trends remain. And then if something happens and that changes, then we'll change as well. But if you're someone who's a little bit more reactionary to what you see in the market, until we get something that tells us, hey, it's kind of the end here, and more tariff news or whatever that is, until then you have to ride the trends, right? Because even when we got the GDP news and that was negative, we recover near the end of the day. So, pay attention. I'm going to focus, as always, on things making new relative highs and new all-time highs. So, for example, ITA is something that's making new all-time highs, breaking out here. So, aerospace and defense could be a good place to look. When I see defense, I also kind of start thinking about this is the HAK ETF, HAK. There's another one that's BUG or BUG, cybersecurity. If we're going to be spending on military more and those are going to benefit from it, makes me think that we should also be spending on cybersecurity and cyber military, because that's just where the world is going, right? Everything is electronic. So everything's a computer, I think is the quote. So we need to make sure that, we're looking at these areas that are doing the best. It's generally never the NVIDIAs of the world, which you can see is still below the AView from all-time high. It's generally not these names that get us out of the next market. It's not the one that got us out of the last bear market that gets us out of the next bear market. So take a look. That's what I'm going to be spending a lot of my weekend doing. Where are we seeing the strength? That's where I'm going to focus my attention on. And again, for everyone that I met down in New York, it was very nice to meet you. There's a lot of really cool people there. For anyone who is still does not have a systematic trading plan to follow, coming over to StatsEdge Trading, we are weeks away, maybe 1 week away from launching the day trading systems that we're building over there. So we will have day trading, we will have swing trading, we will have investing, potentially other currencies or other markets happening there as well. Lots of different places that we could potentially trade. And until I talk to you guys next time, get away from the screens.